What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we continue to see the battle between the bears and the bulls as we are still right up against the very critical bear market resistance levels. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, just a real quick reminder, this is going to be your last chance to claim the Black Friday deal on Bank Trade Alerts, which is going to be 50% off your first 2 months. So if you haven't tried Bank Trade Alerts yet, now is the best time to take advantage of that discount. You can find out all of the details in the description below. Alright, so today SPY was down 0.12% after a very volatile gap down open after the unemployment data this morning. And as you can tell, there was immediately buyers of the dip at those levels. And we did close right up against the resistance trendline that defines this bear market. So I continue to warn you, this is going to be a battle between the bears and the bulls while we are above the support level at 399 and below the resistance at 408. We're not making any assumptions on who is going to win this battle. We are simply going to let the price action do all of the talking. The bulls are looking a lot stronger when they start seeing the breakout above SPY 408. And it is on the bulls to prove everything because we are trying to break out of a bear market and we already know the bears have the upper hand. So the bulls will need to push through SPY 408 and then we are going to look for a very strong resistance above 408, just a few dollars higher at 414. If the bulls can push through all of that resistance, then we will be looking for an end of year rally in SPY that could take us all the way up to 420 or 430. Again, we're not making any assumptions that we're going to see the breakout. We're going to let the price action do all the talking. To the downside, we want to look for potential support at the 200 daily moving average just below 404, but more importantly, this very critical support zone between 398 to 400. If the bulls lose this support trend line, we are very likely coming all the way down to 390 and then very likely going to see 390 breaking as we fully close the gap at 381. So there is a lot of risk to the downside if we lose support, but you cannot just assume we are going to lose support. It is much safer to wait for confirmation of a breakdown in the price action so that you don't just blindly assume anything's going to happen. Now I will tell you the risk reward ratios do favor the bears while we are very close to this resistance trend line. So continue to expect the bears to continue pushing prices lower from this strong resistance at 408. So make sure you understand both of these scenarios and then make sure you have a trade plan that can react to either breakout, whether it's the breakout above 408 or the breakdown below 399. And you should have plenty of meat left on the bone for a very healthy trade, whether it's to the short side or the long side. You should be prepared for any scenario. Now keep in mind, if we see SPY breaking out and breaking through all of this resistance, there is only going to be increased strength for the bulls, and whether that makes sense to you or not, whether or not you think we should be out of a bear market, is irrelevant because we let the chart do all of the talking. So on this channel, we follow price action and trend, and in the short term, we have a bull trend, in the long term, we have a bear trend, and we are waiting to see which trend is going to overtake the other. Whether the short-term bull trend becomes a longer-term bull trend is to be determined because we have not yet seen the break of resistance. On the NASDAQ 100 triple Qs, we also had that very volatile gap down open after the unemployment data, but instantly saw buyers of the dip, and we only closed down 0.4%. And again, we closed right on top of the very critical bear market resistance level at 293. Remember, I don't have a picture of a bear at these levels for no reason. There is going to be bears stepping in at these levels. For that reason, it's going to be bullish if we break above 293, and then we'll very likely hit the double bottom price target of the gap fill at 308 because we did double bottom off of 260 and break above the neckline at 284. So we do have a valid double bottom price target at 308 as long as we're above the neckline at 284. So for that reason, that is going to be your critical support as well as the support trend line, which is now right around 287. Critical resistance is 293 and critical support is 287. So trade the range or wait for the breakout. It's up to you, but do expect there to be plenty of resistance where the bear lives at 293. On a break below support, we'll have the last line of defense at 282 because below that, we're very likely filling the gap at 268. And on the break above 293, look for the gap fill at 308 or find resistance at the negatively sloping 200 daily moving average, which is now at 305. In the Dow Jones, we were up 0.1% today. Again, gap down after the unemployment data and found buyers all day long. And we still do have a bull trend in the Dow Jones, but we are coming to very critical resistance around this gap fill at 347. I think it's more likely you're going to see bears stepping in at the gap fill at 347, driving us back down to 331. and that is why we do have the arrow drawn to the downside. However, if we break above 347, we could still reach 353, and to the downside, you're looking for support at 342 and 337. Below all of that support, we fill the gap at 331, and then we'll be looking for the potential of another strong support there. On the Russell 2000 IWM ETF, we're up 0.58% today, and as you can tell from this chart, we did see IWM bouncing off of the support trend line at that level at 184, and we did close above the resistance trend line just above 185. So closing up here around 188 means we still have resistance around 190. So the bulls need to break 190 to start getting their next trip higher to 195. The bears want to break the support at 184 and then come all the way back down to fill the gap at 178. So you can clearly see there is battles between the bears and the bulls in all of the indices, and we are at very critical support and resistance levels. So starting as soon as next week, we are very likely going to see a resolution to this battle. On the ARKK ETF, we are up 0.69% today, and ARKK did squeak out a close just barely above the 50 EMA, which was that strong resistance zone around 38. Above 38, that does mean we could run up to 40, but again, this is going to be very strong resistance, and we cannot assume we're just going to blast through it and continue higher. From this resistance at 38, we can still see a high volume rejection and come down to fill the gap at 34, so that is still going to be the downside risk in ARKK ETF as long as we're near this resistance. The other support on the way to fill the gap is still going to be this level right around 36.5. On the VIX, we were down 3.83% today as we continue to see the VIX printing red candlesticks, and we did see the VIX closing down below 20 for the second day in a row. And while this is typically a bullish indication and this means fear and volatility are leaving the market, I will warn you, we did see the same exact event happening back in August, and we still did see high volume selling from these levels. So we're not out of the woods completely, and this is a lot of red candlesticks for the VIX, so do not be surprised if volatility starts stepping back into the market. While the VIX is at these low levels, the bears can still load up on cheap short positions. The longer the VIX stays below 20, the more important it's going to be that we could be heading into a bull market, but that should be synonymous with the indices breaking through resistance, so we will wait for the price action to confirm it. On Bitcoin, we're currently up 0.56%, and Bitcoin is still trading around this resistance zone between 17,000 and 17,550. A break of this resistance should send us to 19,000, but if we lose the support at 16,000, we're likely going for the next leg lower to 14,395. On Amazon, we were down 1.43% today as we had that clean rejection from the resistance at 97, and we're right back down towards a 20 simple moving average at 94. A continuation of the downside helps us fill the gap to the downside at 89.5, and below that we have support at 86. If we lose all of this support, we still have a valid downside price target at 77. Upside resistance remains 97 and 102, with 102 being the critical resistance the bulls need to break. On Microsoft, we were up 0.13% as Microsoft tried to break down through support right below 252, but obviously there were buyers of the dip and we closed above that level for the third day in a row. This is looking more and more bullish the longer we stay above 252 for coming up to fill the gap at 265, but I do expect that to be strong resistance. Manage your risk around support at 252, and if we break below 252, look for a retest of 247 and then 242. On Nvidia stock, we were down 1.51% as Nvidia is holding the breakout look above 166, which increases the probability we're running back up to this resistance at 176. On a loss of support, look for a retest of critical support at 156, and if we lose that support, look for the gap fill at 142. On Tesla stock, we were up 0.08% today, so we went absolutely nowhere, and we're still below this critical resistance at 197. We need to break 197 to come back up to 205, and then above 205, we could see Tesla running all the way back up to 230. A rejection from 197 sends us back down to about 177, all the way down to fill the gap about 171. So do remain cautious. If we do see a rejection from this resistance at 197, we are very likely coming down to fill the gap. On Apple stock, we were down 0.34% as Apple did everything in its power to hold above this support at 146, but still closing below the resistance at 148. Remember, this is a declining resistance trend line, so each and every day the resistance does continue to head lower. So critical resistance on Apple remains 148 and then 150. The bull breakout above resistance will take us up to 155, and the bear breakdown below support at 146 should take us down to fill the gap at 138. The financials were down 0.47% today, closing right below the 5 EMA and right near this support just below 36. And the biggest risk on the financials is coming down to fill the gap at 34.35. The industrials were up 0.57% today, continuing to look very strong with price action above all the moving averages and still in a bull trend. But the risk will be a rollover from resistance to come down to fill the gap at 97. The healthcare sector was up 0.26% today, continuing to look extremely bullish, closing near the upper Bollinger Band and still in a very strong bull trend. Continue to stay bullish in the healthcare sector as long as we're above 134. The energy sector was down 0.59% today, continuing that rejection from the resistance at 92 and still above the support at 88.5. Wait for a breakout in either direction and then you will know the next leg in the energy sector. So jumping back over to the S&P 500, we are still within the battle between the bears and the bulls for battle of control of this market, and we are still in a short-term uptrend within a longer-term downtrend. There has been no resolution of a breakout in either direction, so remain cautious at critical resistance because we are still in a bear market until SPY breaks above 408. Above 408, we look a lot more bullish, and then we can start considering the possibility the bear market is over. But with this huge gap below at 381 and coming into critical resistance, this is not the time to be getting overly bullish. Wait for the confirmation of the breakout. As bears, this is your time to step in and take on risk at critical risk levels because you have very well defined risk right here at very critical resistance. Also, don't forget to take advantage of the Black Friday special deal off Bank Trade Alerts where you can get 50% off 2 months of Bank S Plus or Bank. All you need to do is apply the coupon code Black Friday at checkout. Bank is absolutely crushing the market, beating all of the indices, including the TQQQs and the SQQQs, which is the only thing Bank trades. So take advantage of this special Black Friday deal now and try out Bank if you haven't already. And keep in mind, this is a limited time offer that will be expiring at the end of November. Also, if you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.